So let's talk about the origins of an inducement. So as you can see here, there's a break of structure. But before starting to look and analyze what happened during the break of structure, you want to look at what happened before. Before the structure break, there was a resistance to stop the structure from breaking earlier, which would be your scaling zone. This area stopped price from breaking. And as you can see here, you have an extreme supply level. So your scaling zone would be used as a rejection, which would be your inducement. And this rejection would be used to balance out price before attacking your initial point of interest and reversing. So let's get into this. So here you have your scaling zone. This level stopped price from breaking down and held price above that area for a certain amount of time before breaking down. So now what you're waiting for is a significant rejection from that level. So now that you have a rejection from that level, you can officially mark up your extreme order block. Why would this be your extreme order block? Because now we know this order block is valid and you're waiting for price to approach that area to get in a position. And let's locate our scaling zone. So this would be our level. Why? Because you can see price really wanted to break structure. Price wanted to break structure right here, but instead it found rejection, grab a little bit more liquidity to drop down. So this would be your scaling zone. And now you would mark your order block that caused the break, which would be this order block here. So think of it like this. Price wanted to break structure here, but did not, got met with buy orders, grabbed a little bit more liquidity and dropped down. So the majority of the sell orders here. So we understand that there was sell orders injected here to break this level to overpower the buy orders right here. The buy orders that rejected price initially, they got overpowered by the sell orders. So price needs to come up here and reject one more time for the sake of balancing out price before approaching this level. Again, this order block will not be valid if price just breaks through this level and does not reject and goes directly to your order block. This would be a no trade. What you would want that rejection to validate this order block. Okay, so we had a rejection. So what we do now is we can mark this level as our inducement. We can mark this level as our inducement. And what we would like to see is for now price to take this level of liquidity out, stop hunt, and drop. So again, this would be your purge. So an easy way to spot your scaling zone would always be what you can see on the macro. So look at this instant. Price right here was in a supply and demand structure, but out of nowhere it switched to support and resistance right here. As you can see, this retracement here rejected from this level right here. Unlike if it's mirroring its previous price action, price was rejecting from a supply and demand. Price was breaking and retracing pretty deeper. So again, what happened? Price was retracing deep. Then after a while, price changed profile and went for a support and resistance structure right here. So once you see that happen, you would want to mark out the shift where the structure changed. So you would go in right here. And right now we're on the 4-hour time frame. So what would we do? What would we do next? Is go on a lower time frame. Now that we go on a lower time frame, let's see if we can locate our scaling zone. What do we see here? We see a demand level right here that held price above structure. So you can see you have one rejection, two rejection right here. So we would stretch this out and see if we have a further rejection. So we have a further rejection right here. So now what you can do, you can stretch this level all the way out. Now that you stretch this level all the way out, you know that this is a high level of liquidity. Now let's see what caused this entire break. So what caused this entire break? It would be this supply candle right here. This supply candle. So you would stretch out that supply candle, and since you already had the initial reaction, what you're waiting for is an entry at this micro point. And this is ideally your best lower time frame entries with a small stop loss. In both macro and micro. So in macro, it would be your swings, and in micro, it will be your bases. So let's start off with the micro. So let's say you have a base right here. And we understand whichever direction the base breaks to, that was the orders dominant in that base. So let's say if in this case, the base broke out to the bullish side, that means this was a buy order dominated base. So now you would highlight this area. You would understand that there were buy orders injected here to push price above. So now that we know there are buy orders here, what are you waiting for? You're waiting for a retracement. You're waiting for a retracement right here and a rejection because you know that there might still be buy orders left from that expansion. So what happens next? Price rejects, comes back again, rejects, comes back again, rejects, draining this level out to then break to the downside. So let's say this happened. What does this make this base? This makes this base a sell base because it broke to the sell side. That means sell orders were injected right here. So that you know that the sell orders were injected here, look what happened. There were buy orders here. There were buy orders in this area. And as price was tapping it, there was less buy orders till eventually it broke out. And what happened here is this is where more sell orders from this base were injected to completely take over this area. So what are you waiting for next? What you're waiting for is a retracement back to this base to grab more sell orders to drop down and continue the reversal. But what you want to happen first is a complete liquidation of your previous area, which would be right here. Why would you need this to happen? Because of the sell orders injected right here to completely take this area out. You would want a last test to balance out the books before price can come up and go to your initial sell base that was responsible for this entire break to continue down. And this would be your inducement. This is where the liquidity was on a retail standpoint, and this is where the purge happened. So, in a single swing perspective, this is how you would look at it. You would have a bullish trend. Let's say at this point, price finds resistance right here and then breaks down. So, where would be our scaling zone? It would be where price was held above that level for a certain amount of time. So, this would be our level. This would be our previous demand that held price above this area. So then you would look at what caused this entire break. Because what we do know is price did find rejection twice right here, but eventually broke down. So what does that mean? That means there was a lot of selling pressure that came in. So we would automatically look at the extreme, or if there was a previous micro swing right here that was responsible for their initial break, this is what we would pick. So now we will have this area marked up. And it's as simple as that. You'll be waiting for a rejection right here with a significant move for then price to eventually come up here. Use the sell orders here to drop down. This would be your inducement level, and this would be your stop line. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, but make sure you check the website where I added a bonus lesson to this lecture.